Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 28th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. The more likes this video receives, the more people will see this video and more people will benefit from it. So please don't forget to hit the like button. I'm going to try to go pretty fast. I have kind of limited time, very busy lately. So stocks did gain for the week. We'll see if the bear market is over. Dow Jones especially was a strong gainer. The high yield bonds, junk bonds are confirming this move higher for stocks. We'll show an example of a trade we did. China short yielded over 37% profit on the stock itself. So if you did the options, it probably tripled that. Important test is coming up for dollar bulls. Maybe finally dollar is topping. This would benefit precious metals, obviously. Treasury bonds were deeply oversold and they are bouncing currently. I think interest rates will be coming down at least in the next few weeks to month. And if you're a subscriber, we will cover quite a bit of stocks this week. You can see here various ETFs as well as individual stocks like Amazon, Google, Johnson & Johnson, McDonald's, Facebook or Meta, Delta Airlines and United Airlines. So stay tuned. If you're not yet a subscriber, consider signing up by following the link in the description. All right, so S&P 500, we had a hammer candlestick here on Thursday, October 13th, so a couple of weeks ago. At the time, it looked very scary because what happened is, I'm going to zoom in on this action. The prices collapsed below the previous lows. Previous lows were set right here on October 3rd. The prices collapsed below the previous lows, but then by the end of the session they rallied, and this is what's called a hammer candlestick. Why is it a hammer? Because it actually looks like a hammer. There's a metal or whatever part of the hammer, and there's the handle of the hammer. So this usually indicates a bottom of some sort. The longer this handle, or we can call it the shadow at the bottom, the more stronger we can consider this hammer candlestick. So usually those are indications of a bottom. Coupled with the fact that we did move quite a bit lower, notice we had a couple of short signals here using my indicators. So short signal were here in August 26th, another one was here on September 13th, and we actually moved significantly lower. Then there was several attempts at the bottom, right there, October 3rd, and then finally October 13th, and we rallied. So right now, since we're still technically in a bear market, we are considering this rally as a counter trend rally. The trend is down, rally is up, so it is counter to the trend. Having said that, it's entirely possible that this is indeed the bottom of the current bear market that started this year. If it's indeed the bottom, then most likely we're going to see a test of this premise. So the test is coming up relatively soon. So using again my indicator lines, for which you can read more in the description, this red support resistance line currently at 3991, we're super close to it. So currently the stock S&P 500 is at 3910. That is 2% away. So what are we expecting at that level? We're expecting some sort of a topping action, something similar to what happened, for example, following the previous rally. So the previous rally bottomed out, or the previous leg down bottomed out in June of this year, where I'm hovering, and then we had a very large rally that actually burst through this red support resistance line in late July, continued higher, but then rolled over. So we're looking for something similar. We're going to be looking for a high above this red support resistance line or a close above this red support resistance line, and then a rollover. If the stocks indeed roll over with something similar to what we had here, where I'm hovering in late August or in mid-September, then we'll say, okay, possibly the bear market is not yet over and we should consider selling the stocks short. But it's also possible we'll just continue higher, especially with the way Dow Jones is behaving. So let me show you Dow Jones. Dow Jones is leading the stock market higher yet again. This happened from the previous rally from June. Notice we bottomed here in June of this year, and we had a very big rally. It topped out exactly at this blue support resistance line. I'm going to zoom in. So notice we had a rally. We had a couple of attempts to go higher on August 16th and 17th, and then it failed. We rolled over, had a short signal right there on 26th of August, and another one on September 13th. We rolled over with a vengeance. We made a new low. Same thing, had a hammer candlestick on the Thursday, 13th of October, where I'm hovering, and now we're seeing this pretty strong, significant rally. In fact, today it was a very big, day. We burst through this resistance. Notice this red support resistance line. We went above it on this Tuesday. We haven't reached. S&P hasn't reached this support resistance line yet. So I'm looking at S&P 500 preferentially, but Dow Jones is definitely a part of the market. So we're watching it as well. Now, once again, Dow Jones is leading the stock market higher, and as of right now, we're 2.5% away from bullish levels. Where are the bullish levels, and what do I even mean by that? Bullish levels means that above that level, currently it is 33,758. This is my blue support resistance line. If we close above this level, we will say that we are now in a bull market, and we'll think that we're going to start making higher highs and higher lows. Bear market is the opposite. We're making lower lows and lower highs. So lower lows, lower highs. Lower lows, lower highs. Lower lows. Okay, so we're waiting for a close above this blue support resistance line to say, okay, now bear market is over. We're start thinking about buying. We want to be buying at that point, but not yet. We're about, we're actually not that far off. It's only 2.5% away. Once again, Dow Jones is important, but S&P 500 is much more important, and it is still lagging the Dow Jones. So I will be looking to S&P in the next few weeks, especially as it tests this overhead resistance at 39.91, 39.91. But if it goes above it, then we'll look at the very super highly important support resistance level at 43.18. So 43.18 is the bull market for S&P 500. At that point, I'll have, it's basically all clear. We're going to be making new highs. We haven't done that yet. Notice how weak the NASDAQ is. So whereas S&P is approaching the red line, Dow Jones is approaching the blue line, is approaching bullish levels. NASDAQ actually just barely made it above the yellow line today. So notice how weak they are, and we're so close to new lows still. There were several stocks that collapsed. For example, Facebook, or also known as Meta, Google, and Amazon were all under significant pressure, and they're all big parts of NASDAQ. So yes, NASDAQ is under pressure. However, as they say, the tide lifts all boats, and I think if S&P 500 continues higher, I think NASDAQ will follow. So for NASDAQ, important levels to watch are 12,840, which is the red support resistance line. Last time we sold it short there very successfully. If it clears that level, the bullish levels, or the levels where we would consider the bear market over, is 14,400 or so. So let's watch again what happens with Nasdaq. Here's the Russell 2000. So Russell 2000 small caps index. It's very similar to Dow Jones and Nasdaq, but it actually entered the bear market even earlier. It entered the bear market back here in January. Notice where I'm hovering. Beginning of a bear market for per my system, closed below this yellow support resistance line. We had multiple opportunities to sell it short where the downward facing arrows were. Latest one was as early as August of this year, late August of this year. Again, successful trade. So now we're watching Russell. I'm actually gonna, I'm watching Russell even closer. The reason being is we can project my indicator lines into the future. Notice what's happening here. The indicator lines are kind of coming down. So notice especially this blue support resistance line. It is projected into January of this year. So what does that mean? The price is right now below these levels. However, in the not so distant future, the prices will be very close to the future projected levels, which are bullish. In other words, at that point, once we close above this blue support resistance line, we will be thinking about buying. We'll be thinking about change in trend, whereas now we're in a downtrend. Possibly in the not so distant future, we will be in an uptrend. And especially it's pronounced here on the Nasdaq, because notice how the indicator lines are coming down. Additionally, the range is narrowing. So notice this future potential range is 367 points, whereas the current range, or distance between the yellow and the green line, is 540 points. So this is good in a sense of if we're expecting a trend change, we should be. It will be easier for that trend change to occur when the range is narrow versus when the range is wide, because the distance, because the price needs to travel less of a distance when the range is narrow. So we're watching especially the major indices, the Nasdaq, the Russell, very closely to see if the trend change is in the air. And I have a feeling, I mean, again, it's a feeling, but it's possible. Yeah, it's possible that the bear market is over, definitely. Looking at the high yield bonds, junk debt. So high yield bonds normally follow S&P 500, normally follow stocks. In other words, if S&P 500 goes up, high yield bonds also go up, and vice versa. So right now there is no divergence. High yield bonds, junk debt was making lower lows and lower highs. It was in the bear market. It is currently bouncing. So we will see again what happens in the future. I wanted to highlight one particular data point, and that is right there on Thursday, the 27th of October. Notice that the green is a green candlestick. So in other words, price gained for junk debt. Notice for example, Nasdaq. Notice it's a red candlestick on the 27th. Dow Jones gained a little bit. S&P 500 lost a little bit. So some people said, okay, so if the stocks are rolling, could the stocks be rolling over on Thursday? And I was like, maybe, but I'm much more. I trust junk debt more than I trust the stocks. And on that day, on Thursday, junk debt actually gained. So I wasn't like in a horrible panic to say that, okay, that's it, we're rolling over, we need to start selling short. And actually I was correct, because today from Thursday into Friday we gained, and it's a strong gain too. It's a 0.79% gain for high yield debt, and a very strong gain for other indices. Notice especially for Dow Jones, huge candlestick, 2.5%. S&P 500 2.3%. So nice big gains. So look, another kind of small piece of advice is also, if you're trading stocks, look to junk debt, high yield bonds, JNK. What are they doing? Are they doing the same thing as stocks? If they're doing the same thing as stocks, that's a confirmation of what the stocks are doing. If they're doing something different, usually I would trust the junk debt. Okay, briefly I'm going to highlight a recent trade we did, and this is FXI, Chinese shares. As you may recall, on Monday 24th of October of this year, Xi Jinping, the premier, well, what's his official title? He's a party chairman, became emperor for life, or you can also call him third term, I don't know what they call him, premier of Chinese Communist Party. So basically he's doing like an authoritarian kind of thing. He wants to remain in power, and this has similar events have happened in the history of authoritarian states, especially since I'm really familiar with the Russian and Soviet history. It has happened indeed during the 1920s when Vladimir Lenin declared new economic policy, also known as NEP, where he allowed limited private enterprise for economy to, develop following the civil war in Russia. Then at a certain point, once it became convenient for them, for the communists, they said, okay, the new economic policy is over, and all of you neo-capitalists, we're going to arrest you and we'll expropriate your money that you have accumulated because of because we allowed you to, have economic for-profit organizations as corporations. So I think something similar is happening in China. He's basically cracking down on pretty much everything, and I think this is a reflection because this is a stock market, right? Chinese stock market, a very weird phenomenon if you think about it, because stock market is indeed for profit, and while the communism kind of ideal is not profit and everybody is equal, etc. So what we're seeing, I think, is finally a crackdown on that for-profit kind of thing, and going back to authoritarian and everybody is the same kind of thing. So the markets right now are still semi-functioning, and we already saw this back, obviously, make sure how far back the stock market or the bear market began, right there where I'm hovering, in July of 2021. How do I know? It closed, the price of FXI, Chinese large cap shares, closed below this yellow support resistance line in July of 2021. This is all I needed to know. I don't really need to know anything about communism or who is the ruler of China. I only needed to know this data point that the price has confirmed my suspicions. So at that point I said, okay, we're in a downtrend. We need to look for an opportunity to sell short or open a bearish position. It took a while to get there, and there was the first opportunity in April of this year where the downward facing arrow is. And then we had several more opportunities, one in June of this year, one in late June of this year, and another one as late as July. So if you did indeed open a short position, or for example you bought puts, now if you bought puts in July of 2022, you could have bought them far out, for example 2 years out. There are leap options available. So if you did that, you're in great shape, because over the next few months this particular ETF, FXI China Large Cap, collapsed over 34%. As I keep saying, for options, the move is usually 3 times, at least 3 times. So if you open the short position back here in July, then congratulations, you're basically 100% up. So this is one of the ways we trade during the bear market. We buy puts, for example. I would not sell calls, because what if you are wrong and then you're basically you're broke. So if that made sense, make a comment. What do you think about this whole communist thing? Make a comment. If you have any questions, also make a comment or send me a message. You can also contact me right here on TradingView.com, where I'm hovering. Just send me a message. Okay, briefly continuing to dollar currency index. So dollar currency index is still in an uptrend. But we've had several bearish looking candles, one possibly here in Wednesday 28th of September, another one right there October 13th, and another one right there October 21st. We moved lower below this green support resistance line. In fact, we broke below even the lows from early October on 26 on this a few days ago on 26th of October. So right now the price, I think, will come up towards this green support resistance line, and most likely it will try to get above it. So this is what we call a retest of weak resistance, because since the price is below this level right now, the green line, we're going to say that this is a weak resistance. So let's see what happens. If the test is successful and the price doesn't go above it, then we can expect the price to continue lower towards this blue support resistance line, currently at 107. If that happens, gold should benefit. This is gold, XAU divided by USD. So if the lower part of this equation, US dollar, becomes smaller, then this currency pair will continue higher. So we're very close to lows. So if you're a gold bull, number one, the risk for you is super low. Let's say you buy right there, that's your stop below the recent lows. Coupled with the fact that the dollar could be tapping, the risk is actually quite low if you're a dollar bull. So let's see what happens in the next few days, 2 weeks. If the dollar does not continue higher, then we should be in pretty good shape for gold, potentially a reversal of the downtrend. Again, very briefly, I wanted to show Treasury bonds, TLT. So Treasury bonds, TLT, all Treasuries, all bonds actually, were on the downtrend. The downtrend began even earlier here in January of this year. Notice the downward facing arrows. The latest opportunity to sell short was in March. It was a huge move, 34% move. So if you shorted it back here, that's a nice move in your favor. However, I pointed this one out, I think, last week. So from Thursday the 20th to Friday the 21st, there was this gap. I'm gonna show it without the indicators. Notice this big move down, and then boom, a gap. So we call this the exhaustion gap. It's not easy to spot it, but this one looks kind of, I don't know, it just kind of jumped out at me, and so I was like, okay, I think we're done, at least temporarily. So yeah, looks like we're done, at least collapsing, and most likely we will see a move higher for bonds. So if you know, bonds and interest rates move in the opposite direction. So there's that gap, exhaustion gap, for interest rates between Thursday 20th of October and Friday 21st of October, and then we're kind of rolling over. So it's now entirely possible, very possible, for interest rates to continue lower, in the next few weeks to few months. And a good target to consider is about 3.39%, which is the blue support resistance line. So that would mean also lower interest rates for mortgages and things of that nature. Finally, Bitcoin, and I kept saying that it's about to collapse. It didn't. So if something doesn't go down, it goes up, right? So it's the opposite. Now I'm actually thinking it's possible for Bitcoin to easily move towards this yellow support resistance line, which is about 11% higher, but even more possible, it will continue towards the red support resistance line. So that's about 40% higher, which is about $30,000. It's entirely possible for that to happen. Alright, head over to MasterChartsTrading.com, click on sign up, and sign up for one of the products. I have 2 products and 2 packages. So trading indicators are this green, blue, red, and yellow lines, and they will greatly simplify any kind of trading. You can trade pretty much anything under the sun. The trading indicators are available for TradingView.com interface, and the TradingView.com is free. all you have to do is sign up on my site, send me your user ID, and I will open the door for you. If you need my newsletter, so I send out various alerts throughout the week. So Monday through Friday you get daily alerts by email, and then on Friday you also get, or Friday or Saturday you also get a weekly video recap of what's going on in the markets. So that's also if you need that, I think it's a very valuable letter basically. And the Trading Indicators and newsletter as a package also is available. I think it's the best deal at $59.95 per month. I think it's a very good deal. And if you need to have one-on-one screen sharing with me, you can also sign up for that. With that, thank you for watching and have another great trading week. And please don't forget to hit the like button. Bye-bye.